Last month's non-farm payrolls fell short of the market expectation. The report raises worries about an economic slowdown, increasing room for the Fed to cut rates. But with inflation still holding steady and the uncertainties around Trump's policies, the Fed remains in the wait-and-see mode, holding off on any major policy shifts. So, what comes next? What will the March NFP tell us about the Fed's next move? Stick around in this video as we break down the NFP predictions and how they could impact the financial market. The March NFP report drops on April 4th at 3:30 p.m. GMT3. Stay until the end to prepare for what's ahead. Before we dive in, don't forget to hit the subscribe and notification buttons to stay updated with the latest trading insights. Looking back at the February NFP report, there were only 151,000 jobs added, falling slightly short of the 160,000 forecast. The unemployment rate, at the same time, surprised the market and increased to 4.1%. On the other hand, the wage growth missed the market estimate. The average hourly earnings rose 0.3% month-over-month and 4% year-over-year. Following the weaker-than-expected jobs report, the US dollar took a hit, with the US dollar index extending its largest weekly loss in over a year. Meanwhile, gold and the three major US stock indexes saw significant declines, with the Dow Jones Index dropping to a 7-week low. On the flip side, crude oil prices reacted positively to the NFP report and surged. To trade around the NFP release, watching the forecast numbers is crucial for anticipating major market moves in Forex, commodities, and stocks. For this month, the market is expecting 80,000 to 128,000 jobs to be added, with the unemployment rate expected to tick up to 4.2%. Average hourly earnings are projected to rise by 0.3% month-over-month, and 4% year-over-year. Now here's the key: if the actual data exceeds or fails to meet these forecasts, we could see serious market volatility. Now, let's break down the potential trading opportunities for three key assets that could see high volatility. Stick around until the end to find out some exciting trading ideas. First, let's take a look at the US dollar index. If the NFP report comes in weaker than expected, expectations for a Fed rate cut could rise. As a result, it could drag the dollar down to the range between 103.20 and 103.03. If the wage growth beats forecasts, it may signal sticky inflation, and we might see a surge in the dollar towards the 104.51 to 104.68 levels. Moving on to gold. Prices are currently trending near all-time highs above $3,120, supported by the increasing demand for safe haven assets amid tariff concerns, recession fears, and geopolitical tensions. But with the RSI above 70, gold may be overbought and it could be a hint of a potential pullback. The recent breakout above the $3,057 to $3,058 range has reaffirmed the bullish sentiment. However, if there is a corrective pullback, support could be found at around $3,036 to $3,035. A drop below $3,000 could shift the bias toward bearish traders, leading to further declines. Finally, let's look at US stocks. The S&P 500 futures have dipped ahead of the NFP as investors weigh the impact of Trump's tariffs on growth and inflation. A stronger-than-expected jobs report could attract investors to the S&P 500 and send the index higher, possibly testing 5,700. But if the data disappoints, we could see investors withdraw capital from the stock market. From the technical perspective, a break below 5,500 would likely increase downside pressure and extend the pullback towards 5,458 or even 5,401. The above recommendations are only for your reference and should not be considered trading advice. If you find this video helpful, let us know below and remember to like and share. Don't forget to click the subscribe and notification buttons to keep up with the market updates. See you next month.